Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's update our view on the gold market. Here's not many things to discuss. Major components of the current trading setup we already have discussed yesterday. So we have the short-term bearish context on gold market, the few patterns on the back. First of all, on the weekly chart we have the same completed butterfly and weekly overbought area, while on the daily chart we've got bearish grubber, some overextension to the upside, and actually market collapsed recently. So currently on the daily chart we could recognize coming double repo sell pattern. It is not confirmed yet. This market hasn't formed second close below the 3x3 moving average. That could happen today, for example, or maybe in the beginning of the next week. This pattern itself suggests theoretical target is 50% of the whole prediction, which is approximately around 21 area. So this will be very close to a daily oversold. That's what we will be watching on the next week. Currently at these points, short-term context remain bearish, and in general this action stands not because of some problems with the gold itself, but it mostly comes from strong United States dollar. As you can see, it's significant changes in the interesting rate policy in Europe. So Switzerland Bank already has cut the rate. It is more pressure right now on the Bank of England to do this, just because inflation is slowing, and some more friendly background right now for rate cut in Great Britain. This changes the balance of the rate balance between the major currencies and United States dollar. Besides, all these currencies are parts of the dollar index. Since euro has more relation with the European countries, it is some implicitly suggested that probably Euro Union will have to follow these examples, such as because these economies of the European Union, Switzerland, United Kingdom, is tightly related, and they have some differences, but in general there are lots of common economical processes stands inside of them. So this is some give more evidence to investors that probably European Union should follow with the rate cut earlier than the United States, and that supports the dollar. So you can see what's going on in the forex market right now. It means that in the gold and some dollar appreciation could follow the same direction, and we're watching actually for two patterns. And the first one is a grubber. It's just taken out of these lows, and potentially we also could get, as on the dollar index, as on the euro currency, the same head and shoulders on the top on the fall time frame chart. Or we could use these head and shoulders in twofold, as usual we do, either as a direct downside bearish pattern, or also we'll be watching for the failure of this pattern, not only on the hand shoulders but also on the double repo on the daily chart, because as you know, the failure of the direct pattern is also the trading signal, and sometimes it works even better than the direct signal. But meantime, right now, since it is early to speak about some failure signs, because patterns are not confirmed yet, we'll just keep going with these patterns. And then fall time frame chart, hand shoulders is yet to be formed, shoulder is forming. Divergence stands here, and divergence as a grubber on the daily chart suggests that market should challenge these lows around 21.50 area approximately. So this is the first destination point that we will be watching for. Right now locally market hits the downside target first. Here with our setup you could see market just barely hasn't reached the target that we have specified around 22.15 area with this ABCD retracement. So some kind of the garbage steeple to sell that we discussed yesterday has not been formed just for a few cents, and market just collapsed. Currently, this nearest target already has completed 21.63 from the initial ABCD pattern. Now it makes sense to see for some minor pullback before the weekend. So here we will be watching for 2185, 2190 area. This market could show the pullback, because on the way down to the neckline and the target of the grabber, we should not get too significant, too extended retracement. This will be not good for the shape of the pattern. So from that standpoint, and by this reason, we're mostly watching just for near standing levels and see what will happen. So at this point, I wouldn't consider taking the longs because it's a general overall context and bearish, and we're expecting to see the bearish patterns. Only if you trade on a very small time frames, such as a 50-minute chart, 5-minute chart, maybe somewhere around the XOP might be some minor pattern to be formed that could trigger the pullback. But this is too small time frame for our analysis. That's why we'll keep going with the major tendency. And let's wait for a pullback and see what we could do when it will happen.